tell you what I'm more favorable of. As you know, I don't think there could be anybody more bullish on gold and some other metals as I am right now. I know there's people equal. But he said something, Trump, last Friday that was even more bullish about claiming he wants interest rates cut. He literally said he sees no upside to a strong dollar, and a much weaker dollar was much more favorable to him. That, to me, is more of an indication and what could be coming our way and favorable to the gold market than whether or not there's an interest rate cut or not. First of all, let me say this. There's a dual economy right now. The upper echelon, the 10% that own 86% of all American assets, they're doing very well. To them, the economy couldn't be better, especially where they have a lot of their money invested in markets and things of that nature. The next 40% that own the remaining 14%, some are doing good, but some are falling to that lower echelon. And then half of America that owns no assets is struggling a lot. Eventually, the economy gets weighed by what the bottom is doing or not doing than how much the upper echelon could do. So to them, an interest rate cut of worthiness of 2-3% could be the difference of whether or not they can pay electrical bill or a mortgage payment. We're seeing delinquencies in cars going up. So I think the Fed keeps that in mind, will have that more in the mind. But I also think it backfired at Trump being so heavy on him, because I could see Powell not doing one here now just for the express purpose of 2 more months of Trump not getting his wishes. So you're not supposed to be political in the Fed, but I can't imagine, just like umpires sometimes favorable certain teams, whether they're trying to be objective or not, I think the Fed has its own political choices as well. And Powell's never been a fan of Trump. Yeah, well, there's a lot of things that you're absolutely right. And here he's openly saying that and all. And other than an extremely oversold condition with the most crowded trade existing right now is short the dollar. And that's why a little counter trend rally should be happening. But let's not forget the first 6 months were one of the worst 6 months ever for the dollar. And whether you like it or not, and whether or not people don't want to understand the dramatic breakaway from the United States as a world leader economically, socially, politically, and all, we're continuing seeing slowly but surely that shift away from the dollar occurred. The BRICS did not fold up and die. They're growing. Their talk of how they're about to implement trading among themselves grows, which includes the Shanghai Gold Exchange and what's transpiring there along with the BRICS. So anybody that thinks that the dollar has a lot of upside to it, I think is making a poor mistake. And quite frankly, it's one of the several bullish reasons why not only has gold gotten to where it's gone, but why I think it can go higher as well. We still see, even as recent as this last few days, Newmont Mining, the world's largest mining company, knocks the ball out of the park, free cash flow records, and the sale of the GDX, which Newmont is a key part of, continues to be liquidated, not bought. So overall on Wall Street and in the financial community, they're still treating gold as kryptonite the same way they did when it was 1,300, and also now, at 3,300, 3,400.
You're absolutely right.
So I just think that the near perfect storm that is formed for gold, silver, copper, and uranium remains, and things that Trump is doing are bullish for all 4 of them. So that's why I remain so constantly strong in belief of those metals right now. So I started working on Wall Street in the dinosaur age of the early 1980s. And we didn't know what a trillion was as an advisor. We didn't have to use it for anything. Now there's, 37 trillion. We're seeing an acceleration. Let's not forget, just a few months ago, every hour there was a social media post from Trump and Musk from the White House or somewheres, how deficit reduction is not only going to occur, but we're going to pay down the debt too. And what do we have a few months later? They struggled to get $9 billion in reduction while they passed a huge bill that now people are starting to recognize when they read it and see it, that Social Security, which many people thought could at least last 10 years without any major changes, now is shrinking to as little as 5 or 6 because of that bill. So the argument about this debt is this. If the Congressional Budget Office, which is really the last bastion of any impartiality, if there's such a thing still in Washington, D.C., says now we're going to 50 trillion, in less than 8 years in the debt without taking into account a potential recession or even something worse. Let's just say they're right. They've been right so far. We've seen the tremendous growth in debt. There's nothing happening now that suggests anybody's going to slow it down even, let alone stop it. So put a 5% interest on that. Listen, you and I, especially me, are old enough where 5% used to be a very low interest rate. But 5% is a little bit higher than we've been in recent years, but not high. That's $2.5 trillion in a known interest expense that's going to have to be paid. The best this government has ever done in revenue is just a little under $6 trillion. And if you get some growth there based on, supposedly tariffs or whatever he's claiming now is going to add to our economy and all, we're getting to the point where people, they don't even consider about any of the debt being paid back. Can the interest expense be paid back? And here's the thing you'll be talking about in the coming months about the Fed, whether they cut the September, December, whatever. If you and I are blessed enough to be on this earth a year from now, we will see that interest rates on the short end might be actually lower than they are now, but the long end could actually be higher. And that's going to be the dramatic change in the bond market, that you could see long rates increasing despite the Fed cutting rates on the lower end, because concerns now worldwide, particularly since we depend on foreign investment to support our debt spending, is leaving us. We're seeing people paying less heed to our debt. We're also seeing competitive markets in serious trouble. Do not overlook what's happening in Japan and what's happening with their own bond market.
Absolutely.
A real critical economy. So when you say, interest rates can go lower and you'll turn on a financial media that's all they talk about, they could be right. You could have the short end lower, but it's the long end which is going to matter. And people must remember this. As much as we like to talk about the stock market, the bond market is so much bigger and more important longer term than the stock market, yet we don't focus on it that much. So I do think that, and I understand what Trump's trying to get at. Listen, 2 or 3% lower overnight would lower some of the borrowing costs. It certainly would lift markets that are really in trouble now. The auto business, real estate, they're hurting really bad. And maybe a 2 or 3% somehow magically lower helps. But I just think the damage is done already. So I hate to be bearish, but it is, to me, seems to be the prudent road to take. Well, first of all, let's face facts. Mortgages, which are probably the most important thing, that more people have mortgages probably next to car loans, wherever they run FERT 1 and 2, are based on what long rates are, not what the short rates are. So that's a critical fact. The borrowing, the mistake that the couple previous administrations made, the little lady that used to be in charge of the Treasury and she was in charge of the Fed at one time, when they had the opportunity and when rates were so low, almost down to zero, instead of refinancing the short end of the markets and make it all long-term at 1 or 2%, she let an entourage that just borrowed more money on the short end, which for that time gave them lower costs. But now so much of that debt is becoming refinancing. Not only is $9.5 trillion coming due this year, but almost $28 trillion of the $37 trillion in the next 3 years has to be refinanced. So you start talking about 1 or 2% differences, that's a lot of money. And that's one of the things that also leads me to believe that come next year, Trump is probably going to use gold in some way to back treasuries, because that's going to be the thing people are going to want to have, to be willing to risk the possibility now that not only is my principal never going to be paid back, but you guys might start having problems paying the interest. So I want some security behind that.
Absolutely.
So I think that'll be the big thing come July of next year, that the gold market will be used to help fund some of our deficit spending. I'm old enough to remember a guy named Robert Prechter Jr. before anybody knew who the heck he was. He came out in the early 80s. The Dow had just traded between 700 and 1,000 for 13 years. Wall Street was so bearish on stocks at that time that Business Week ran a front page cover, "Equities are dead." And on the old Wall Street Week with Louis Rukeyser, they were debating how it's going to be so hard for the stock market to go up. And this guy comes out of Gainesville, Georgia. No one knows who he is. And he says the Dow's going to 3,600, and it's going because of some Elliott wave theory that people didn't know about at the time. They scoffed at him and all. Well, the reason I bring it up, obviously we all know it went a lot further. There's this still thinking in the gold business that somehow it should just be somewhere between 1,000 or 2,000. Yeah, a couple of reasons why it got ahead of itself, but it can't really go to 5 or 10,000 or 15,000. And I don't sell it. I don't have anything product that because gold goes to 10 or 15, I make more money other than I invested in the companies that look for it and produce it. But the bottom line is, I think we got to get rid of that thought and think that, yeah, that is legitimate. So when you say 4 or 5,000 or banks are talking about that, just look over what's happening in Asia. As we shop and spend money we don't have on the weekend on products we don't really need, the Chinese community is in stores to buy gold. That's what we should be looking at.